XRP Army sees bullish prospects ahead in today's video. Hey, what's going on, everybody? Welcome back to the channel. Some huge news that we're continuing on this development that we talked about yesterday for XRP. We're going to be jumping into that here in just a couple of minutes. But first and foremost, we're taking a look here at the charts for XRP, currently down today 3.34%. We have 1 hour, 42 minutes left in today's candlestick. We have been talking about this for quite some time. We talked about the fact that when the price ran up, it made this pattern in the RSI called the shark fin, right? So you can see from here up, and then that little slope down right there, shark fin. We said that was going to do a pullback. Sure enough, it did. But then it rallied back quite incredibly, right? So I mean, it made a push to another high in reality. So not on the wicks, but when you take a look here at the actual chart pattern of just the line pattern, you'll see that we had a price here and we had a price here. Price continued to go up. There was a new high created, while down here on the RSI, there was a new low created. That is a bearish divergence that did happen on that time frame. So, and this is on the daily. So when we take a look, for example, on the indicator here, divergence for many indicators, we got the RSI and the money flow indicator to become a bearish divergence. That's why we've been experiencing these continued days in a row of the drop that is starting to happen. And we may not even be done with the drop because of where we're headed. We're headed back to the 50 level of the RSI. If we get below that, we could become bearish again, and we could return back down to the oversold territories. We got overbought, double tapped overbought, now heading to the downside scenario. And we've been talking about this potentially creating a weekly bullish divergence. So you can see we did have a weekly histogram and momentum bullish divergence back here before we made the move to the upside. But what would be really exciting, it would be painful in the short run, but be for long term, if we were to have a new lower price over here somewhere on XRP, just a tad bit lower than this low here. Of the low on that candle was, let's see here, the low of this candle was 28 cents. So 0.28736 was the low on that candle. So if we were to get a tad bit below that, so just barely to 28 cents again, and then bounce from there, we would be able to see a weekly bullish divergence. Now, you'll also notice we've been tracking on the weekly charts here, this higher time frame. We've been noticing that we did get outside of our volatility bands on our TDI, Traders Dynamic. And when it got outside of this volatility band, it typically will break back down inside and do some sort of recovery, most of the time back to the market baseline, this yellow line. At that same exact time that was breaking outside of the volatility bands, it was also rejecting off of our 50 exponential moving average. And now turning on our 21 exponential moving average and also our 50 simple moving average, we can see two different scenarios playing out. One, the 21 exponential moving average on the weekly has been acting as a very strong support. Last week acted as a support. We still have 5 days, 2 hours left in this weekly candle. It just barely launched, right, on Monday. So right here, we're only a day and a half into the candle. Looks like it's potentially coming back down to test off of that 21 exponential average again on the weekly. As we drop to the daily, it has now dropped below the 21 exponential moving average on the daily, headed down to test off of the 50 exponential moving average. So we're going to keep a very close eye on that. What we've also been talking about here on the daily charts, like we were just saying, RSI is getting close to the bottom of the volatility band. So we have two things that could be potentially happening. Weekly scenario, weekly playing out to where we could have a pretty severe drop. But the exciting thing is there's no way that it's going to come all the way back down to this low that was here. So even if it comes down to, like, let's say that this is the trend. So we started here at the low, it came tap this, and then this comes back to tap here, right? That's totally fine. If RSI comes down here, yes, we may have a little dip down, and we might even have a new lower low towards the end of this month. We're just keeping a very close eye on that. And if it does happen, that is a bullish divergence on the weekly And that is something that is very, very rare. You can see last time a bullish divergence, this was a hidden bullish divergence that happened here. And that was when price went from this area, 25 cents, spiked all the way up to 77 cents. But at the same time, price continued to rally through there. So we'll do a deeper dive on the rest of XRP, and we'll even dive down into the 4-hour stuff because there's some interesting things that we can take a look at down here on the 4-hour charts for XRP as well. You can see that it did come to that blue line, that 21 or that 1100 exponential moving average. You can see that it came back, rallied down on the 4-hour. And if you remember, so now it's acting as a support on the daily. That was our recent rejection. So that is a very, very vital supply and demand line that a lot of people don't even utilize, the 1100 exponential moving average, but we'll take a look at that. Unfortunately, there is no 1100 exponential moving average because there's not 1100 candles worth of data. So I can't get the weekly candle there, but that's okay. We're just going to continue using the daily and the smaller time frame. So we're going to definitely cover a lot of charting in today's video. We're going to look at XRP, Bitcoin, and also Ethereum. Also, we've got a bunch of news. And hey, by the way, if you're new here, my name is Ryan Huggins. I'm a crypto and real estate investor here in Orange County, California. And my job is to help be your crypto shortcut, because if you're like most people, you probably don't have the opportunity to spend hours a day looking at the charts, reading through every article out there, watching hours of YouTube. But that is what I do. It's my job to bring that news to you in a condensed manner. So if you're looking for a crypto shortcut, smash that subscribe button. In today's video, we will be covering Voyager Digital won't sue its executives for incompetence, but will claim insurance on them. So we're going to cover this. We've been following this Voyager Digital situation, potentially being bought out by FTX as well. So we'll cover all of that in today's video, that article there. Silvergate Capital's crypto to fiat transfers decreased by 50 billion compared to Q3 of 2021. And I thought this was interesting because what's been happening a lot now in the crypto markets is when somebody, so like, let's say, for example, Bitcoin pumps, you make a bunch of money and you want to take profits. Back in the day, you would sell that out to fiat. But now, with the fact that we have stable coins, USDT, USDC, and so on, a lot of people are just transferring it over to crypto. So they're doing crypto to crypto transfers, instead of crypto to fiat. So let's take a little bit of a look at that. Users upset that Binance's wrong crypto network retrieval fees have soared to 500 BUSD. And by the way, who of you out there, let me know down in the comments, because I know I've actually done this multiple times. In fact, I've learned to send like $100 first before sending the full amount that I'm trying to send, right? So have you ever sent, for example, Ethereum to another person or another network, but instead of sending it on, like whatever network you chose, whether it was the Tron network or it was the Binance network or it was the Polygon network, you're sending Ethereum to someone on a different network, but you send it to the wrong network, they never get the money. Or you send it to Binance, for example, and they want you to send USDT as in let's say Tron, right? So USDT Tron, because it's really inexpensive to do if you've done that, but you accidentally send it via the ERC20 token instead. Well, now you can retrieve that, but they're going to charge you 500 USD to do that. So we'll dive into that article. And here it is. XRP Army sees bullish prospects as Ripple starts EVM compatibility tests on its XRPL sidechain. We covered this yesterday as well, but now people are starting to catch on. It's really interesting. I covered this in yesterday's video. It's the title of the video, and it got very little interest at first, and then it finally caught on. But this is Ethereum's virtual machine. So Ripple and Ethereum are going to be working together. They're actually going to be partnering on the growth of XRP ledgers. Really, really exciting news. So Voyager CEO Stephen Ehrlich, and financial head Evan Posporolis, man, they got some crazy names, will keep their jobs even though they okayed a huge loan to 3 Arrows Capital without sufficient due diligence. So the two people responsible for the entire collapse of the company will be able to stay on board because they didn't vet 3 Arrows Capital. Now, when you loan money to somebody, you usually want some sort of collateral, right? So hey, hey man, I need to borrow $5,000. Okay, well then let me hold on to your Rolex watch. And then when you give me your $5,000 back, or my 5,000, I'll give you your Rolex back, right? So that would be collateral. Unfortunately, they did not do a good job of vetting out Three Arrows Capital prior to lending out lots and lots of money. Voyager Digital has preferred not to sue its top executives for incompetence in spite of their role in approving a huge loan to Three Arrows Capital without adequate due diligence. That loan was a key element leading to Voyager Digital's bankruptcy. Court papers filed on October 17th show that Voyager Digital Internal Special Committee has proposed that CEO Stephen and Chief Commercial Officer, formerly Chief Financial Officer Evan, keep their jobs and not be sued. The court filing describes the due diligence process for the 3AC loan. And it states here that Three Arrows Capital did not provide a balance sheet, audited or unaudited, in response to Voyager's formal due diligence questionnaire. Three Arrows Capital subsequently provided a description of its corporate structure, certificates of good standing in corporation, and a copy of its anti-money laundering policies. So basically, if you went out and got an LLC and you wanted to go borrow $3.729 billion, you could have asked Voyager Digital for that money, and all you had to do was show your articles of incorporation and your paper of good standing from the state. That is absolutely insane, like crazy nuts that was allowed. The committee did not find any evidence of fraud in the executive's actions. According to the court filing, they are making additional contributions to the reorganization plan pursuant to the settlements reached with the special committee. According to Bloomberg, Elrich will pay the company $1.1 million in cash under the committee's proposal, which is subject to approval by the bankruptcy judge. The company has $20 million in directors and officers liability insurance to make claims against as well. As you can see here, somebody on Twitter by petition, so they tweet out, y'all, Voyager Digital filed an amendment disclosure statement today in its Chapter 11 bankruptcy case, and its disclosure about the Three Arrows Capital is effing bonkers. And that is the fact that they did not do any due diligence at all. They just asked for the paperwork. It's just crazy. Crypto exchange Voyager Digital made an unsecured loan of 15,250 Bitcoin and 350 million USDC to Singaporean crypto hedge fund 3AC in March with the approval of the guys. When 3AC was unable to repay the loan in late June, Voyager Digital issued the firm a notice of default. Three Arrows Capital was forced into liquidation by the Voyager Digital action on June 27th. Voyager Digital first cut withdrawal amounts and then froze trading deposits, withdrawals, and rewards the same week. Voyager Digital filed bankruptcy on July 6th. According to the reports, executives' immunity from lawsuit was part of the agreement that allowed FTX US to purchase Voyager Digital's asset at auction on September 26th. Silvergate Capital crypto to fiat transfers decreased by 50 billion compared to Q3 a year ago. Shares tumbled over 20% on the NASDAQ exchange on the weaker than expected earnings. On October 18th, Silvergate Capital, a crypto fiat gateway network designed for financial institutions, announced its financial results for Q3 of 2022. The bank, known for services such as processing consumer fiat deposits to cryptocurrency exchange, saw the transfer volume of the Silvergate exchange network plummet close to 50 billion compared to 2021. Silvergate handled 112.6 billion of such transfers in Q3 of 2022. It appears investors were less than satisfied with the results. Silvergate's share price, as listed on the U.S. NASDAQ exchange, fell by close to 22% at the time of publication after results were announced. That is a massive one-day drop, without a doubt. Interestingly, though, the company's profits actually surged 84% year over year to $43 million. This is because the bank relies on interest earnings from its digital asset customers' deposits, which stood at $13.2 billion in Q3. Over the past 12 months, the U.S. Federal Reserve has increased the benchmark Fed funds rate from 0 to 0.25 last September to 2.25 to 2.50 in September of 2022. Correspondingly, the average interest earned on Silvergate's custodied assets increased from 1.27 to 2.58. So basically doubling their actual asset increase. And the CEO said, while volumes on the Silvergate exchange network decreased in this quarter compared to the overall industry, we remain confident in the power of our platform and the opportunities for expansion within the network. We continued to see demand for our SCN leverage product and growth in our new customer pipeline. Now let's talk about Binance raising their fees for wrong network retrieval. On October 18th, the product team at cryptocurrency exchange Binance held an Ask Me Anything session with users on Reddit. Of particular interest was a discussion that arose regarding the retrieval fees for crypto sent on different networks than the recipient's wallet address on Binance, according to user Max3141, who brought up the issue. He said, I accidentally sent WETH, wrapped Ether, to my Polygon address 2 months ago. Your exchange supports Polygon, but just for Matic. It was only like $100 in value. I found out that you previously could recover this for a $30 fee, and I thought that was fine. But when I contacted you, I found out you raised the price to $500. Another user, Superb Dragonfruit, also raised the issue of having to pay $500, and they responded with saying, token retrieval requires tech and operating effort, which is why we charge a certain fee for processing. It would cost similar effort and time regardless of the value. Thank you for the feedback. We will continue to review our fee structure as we progress. Unlike non-custodial wallets, wallets on centralized exchanges require matching the deposit network addresses of the sender and the recipient. Thus, accidents such as sending unlisted tokens or coins on different networks that are otherwise compatible, sending BEP20, BNB to ERC20 ETH address, results in the funds failing to appear in the exchange's user interface. Instead, exchange staff must manually access their wallet address to recover the funds. A few months prior, Binance charged only 0.001 BTC, around $40 at the time, to recover users' funds that had been sent erroneously. However, not everyone felt sympathy for users voicing their displeasure at the fee increase. One individual, Gamma55, wrote a while back in a post on the same issue. Given that Binance needs to pass the issue to someone with privileges to do manual transfers from hot wallets, the fee is pretty nominal, really. The normal hourly price for a person of that rank with access privilege is easily hundreds of dollars, so they just bill you what they would for bigger clients. Don't send coins and tokens on the wrong networks, and it won't cost you extra. $50 was too cheap and was probably abused to gain support for unsupported stuff. So let me know down in the comments, have you ever sent coins to the wrong network? I know I have. I've done it actually multiple times. I've learned my lesson. I don't do that anymore. Now, prior to sending, I double and triple check the network and also that the address I copy and pasted are the exact same. XRP Army sees bullish prospects as Ripple starts Ethereum virtual machine compatibility tests on its XRPL sidechain. Now, we did cover a little bit of this yesterday in the fact that it was starting, but this is more continuation of that article here. Ripple Labs kicks off tests on its XRP Ledger sidechain with the Ethereum smart contract capability. This is the first phase in a three-step process to integrate an EVM-compatible sidechain into its mainnet. XRP community has hailed the move as strategic to the network's growth, but says it is coming way too late. Smart contracts made for the Ethereum blockchain will soon be deployed with ease on the XRP Ledger mainnet as Ripple's community buzzes with unbridled excitement. Ripple begins testing Ethereum smart contract compatibility with the XRPL sidechain to enable developers to deploy smart contracts made for larger Ethereum blockchain on its network. The firm has announced that Ethereum virtual machine compatible sidechain is now live on Ripple's DevNet, where developers test projects before launching on the mainnet. The new developer bridge feature to Ethereum will happen in phases, with the first phase being the announcement. The second phase begins in the first quarter of 2023 as the sidechain becomes permissionless, allowing anyone to join in. The last phase will see the software fully deployed on Ripple's mainnet in the second quarter of 2023. XRP Army sees prospects. Ethereum hosts the highest number of decentralized applications and users, making it more popular in attracting new projects. The new feature reduces the entry barrier for new developers to deploy smart contracts. The XRP community has lauded the development, citing several benefits ranging from more smart contracts on XRPL, leading to increased adoption of XRP, to a cross-chain bridge for easy transfer of assets between both networks. With all the waves of the positive prospects for Ripple, some analysts still believe that the network is late to the party, as other blockchains have integrated EVM compatibility, giving them an edge. So what do you guys think, XRP Army? What do you think about adding the ability for people who know how to develop smart contracts and businesses and decentralized apps on Ethereum now being able to simply move over to the XRP ledger and just start doing what they do? They could literally make their same apps that they have on Ethereum. They can now make them right here on XRP and have no problem. That expands the ability, the excitement. Obviously, XRP is the cross-border payments, but what if it did other things? Do you see how that could potentially bring more excitement to the actual project? Let me know down in the comments what you guys think. Now, speaking of excitement, I have a really great project coming up for you, but let's go ahead and finish out those charts and see what's going on with XRP. All right, so what we're going to do here, we're going to go ahead and turn off all of our indicators. Start here with the naked chart on the daily. We're going to jump down to the Heikinashi, and we're going to look for our supply and demand zone. So first and foremost, we go all the way to our bottom level. Our last supply and demand zone is this blue candle here, and that would be our bottom level that we've been talking about. If for some crazy reason it broke all of these different supports on the way down, we could see a 34-cent potential XRP. Now, what would it have to break in order to get down there? Well, first it would have to break this level, then it would have to break this level, and then it would have to break this level. So that we know are the three key levels that are still going to hold us as a support level to the downside. We have 44 cents, basically 44 exactly. We have 0.43753, 0.43753, and then last but not least, we have 0.41616. Okay, so what I'm saying is, as price continues to drop, these levels will become a support where it would bounce. It might come back down, bounce, and then if it continues its way down, we would see it coming back here to this 41-cent level. Now, if we did have some sort of great reset move and all the things that we're talking about, boom, we could be falling back down to these levels here of 34 cents. And then if we wanted to have that weekly bullish divergence appear, we would have to get a new price just tiny tap below this 0.28736. So let's keep that in mind as well. Now, some of you guys may be pissed off at me right now thinking, oh my gosh, why would you ever want to see XRP at 28 cents? Well, there is another interesting thing here indicator-wise, and that's the fair value gap. And if we're taking a look at it here on the Japanese candlesticks on the daily, there is one right here that's currently sitting at 27 cents. 27-cent fair value gap. That is a possibility that that gets filled as well. So what's really good about that is that it's barely below, it's 1 penny below that 28-cent bottom. So, I mean, it's almost like teasing us. Now, some of you guys are like, well, I'm ready for it to pump to the moon. I am too. I really am. But the reality is, if price were to come down here and take a little tap below this fair value gap, below this previous low price, and give us a new lower low on the weekly price, like we've been talking about, just a new lower low here on the weekly price, and then our RSI would be a higher low. It wouldn't be a higher high, it'd be a higher low. Let's pull that up here for you. Okay, so we have this this is the lowest low, and then this is our most recent low. And if it had some sort of pullback to here, and it had this crazy price drop and give us a weekly bullish divergence, that would give us a lot of confidence to explode to all-time highs. I'm talking previous all-time highs, the $3, $4, $5, $10 XRP. That's the kind of ammunition it would have. Let me show you what happened when it happened on Ethereum. Okay, so here's Ethereum, and I'm hoping the same thing happens for Ethereum as well. There's a nice, beautiful fair value gap right in here, this $800 to $725, but that price could come down, swoop that up, and just take off. Look what happened right here. Bullish divergence off of this candle. It rode all the way up here, had a pullback, and then finished at its all-time high. Prior to that, we had a bullish divergence here on the weekly charts, starting here at $117. Boom, that $117 ended up wicking all the way to $4,300, okay? So if we're now starting somewhere in here at this 700, let's just say $700, and then we would get up to the $10,000 Ethereum mark, I'm okay with having a dip real quick. You know what I mean? So that is something to keep in mind. And then also when we look at Bitcoin, same thing. We had a bullish divergence here. That was the move, right? So the big move with a pullback and then the all-time high tap move all came off of a bullish divergence on the RSI. So I'm going to keep an eye on that. Just wanted to show you that there real quick. So in reality, though, we do have a lot of defense on the way down. So if that's going to happen, it has to be a really heavy, hardcore move, some sort of major catalyst in our market system to have the drop. Like stock markets are going to crash, Bitcoin's going to crash, Ethereum, everything would have to crash, and it would have to have some sort of reason for that, for it to bust through all of these different support levels. And then even when we turn on our indicators, like for example, our moving averages, it just broke to 21, but the 50 is still there supporting it. And then also our exponential moving averages of the 50 and then also the 1100 are there, right? So it did break below the 1100. It had broken above it, broke below there, 21 exponentials here, 50 exponentials here, 50 simples here. All these different support lines are there. So there's a lot. Like it would have to be a massive volume event to make it drop. And then that's just only getting us to 34 cents. Then it would have to continue down to the all-time low. So that's what we're looking at there. Conversely, to the upside, what we're looking for, we need to break this level here, this 56-cent level, this top wick right here. So we break 56 cent. This one needs to come down here. It's actually 55 cents. Why is it doing that? Oh, it's just moving with that. Okay, so 55.894. So basically 56 cents. Because after we break that, then we have our next level that we would be able to target. And that next level of target is right here to the upside, 65 cents. And then our next level of target is right here to 78 cents. The bottom level of that 75 cents. So that's what we're tracking. That's what we're looking for. Are we going to have the breakdown, or do we gain support here and start to make that move to the upside? We'll keep an eye on that. Ethereum. Let's look at Ethereum real quick. So Ethereum on the daily, it's been holding this really, really good support. It also has this support line of trend here that's been coming in play all the way since back here of the June low, June 18th, when we got that crazy low wick there. We've been battling back ever since. Right now, we're in a pretty severe consolidation. We are bouncing outside of our volatility band. So we may see some sort of pullback here on Ethereum, because remember what we talked about when XRP did on the daily, it got out of it, had to pull itself back down. Ethereum got out of it, may very well pull itself back down. On the daily, we do have a bullish divergence here. It happened on this big dip candle, but we haven't seen the explosion to the upside, and we have not had that happen on the weekly. The weekly chart would have to have the move down below its previous low of 873 or 880. Sorry, 880 is the low. It would have to be a little below there. 873. RSI would come down just a tad. Maybe come back and touch this here, as long as it doesn't go below there. And now we have bullish divergence for Ethereum. And as we look at Ethereum, what we would have coming into play, so support level is down here at $1,274. And the next level of support is all the way down here at 1189. So these are the levels that it could likely break. Those are support levels to the downside. Resistance levels for our upside would be here. And this one is that 1343 level, which it did just recently tap and reject it off of. After we break that level, we can move our way up to this level here, 1383. Then we would have this level here, 1400, and then this level here. So as we were talking about how XRP has a lot of defense for it to break through, right? All the moving averages, all the support lines. Ethereum has the opposite, right? There's some potential of major drops easily here. But to the upside, it's got to battle this, battle this, battle this, battle this. So it's going to be a hell of a fight for XRP to the upside. But we will keep tracking that as well. So we have 1383, 1400, 1409, and then 1476 as potential resistance on its way up. Looking at Bitcoin, Bitcoin is also similar to this. So support levels to the downside are going to be here at 18,983. After that, we have one down here at 18,131. And then after that, we would have to be going back in time pretty severely all the way back to here, which would be the June lows. Oh, I didn't go up there. There we go. 17,567. So, and I mean, we're on the way down there. And then the same thing as Ethereum, how we talked about how it's going to be quite the battle to the upside. I'll just show, here's a tool. I'm going to show you guys something. Instead of doing these lines, there's this really cool tool. It's an indicator, and it is called Makachaku, Makuchaku, liquidity visualizer. All right, I turned too many on already. Fair value gap off. Liquidity visualizer right there. And there you go. So those are the levels. Now this also shows you, let me go ahead and clear out here. There we go. This also shows you where the liquidity is, right? So if you've ever heard of that, for those of you guys that are into trading, where price might be going, they love to eat up liquidity, right? So this is on the 4-hour charts. Let's look at the daily, because that would be more of a smarter move. So we have liquidity coming into play here at 1900. Here, let me zoom in on this a little bit for you guys. And then also take this down. Okay, so now you can see these levels. Because look at this one. This candle came and cleared out liquidity, liquidity, liquidity. Cleared out all three of those levels, because this is where people put their stop losses, and the brokers, the market makers, will come and clear those all out. It didn't quite get down here, so there is still liquidity at 1,754 for Bitcoin. Okay, so that's the low. And this liquidity tool only goes back in history a certain amount of time. So it's not going to go back here, right? Because that was a long, long time ago. But you can see to the upside. I mean, look at this, guys. This is what I'm talking about right now. Okay, there's not much left. There is not much left for the market makers. They started doing this right here, creating all of these orders, all of these orders, all of these orders. Like, I personally think the bottom is freaking darn near here, right? Because what do they have left to swoop at the bottom? Nothing really. They're going to make this move. They're going to come out and clear all of these different stops right here. All of these, okay, cleared, buy. After that's done, then they come up, swoop all of these people that were shorting, and they're probably going to make that move fast. Boom. It's going to freaking be a bolt of lightning to the upside. I'm not saying it's this week or next week. I personally think it's probably like the last week of October, the very beginning of November. We're going to see a move, because the Federal Reserve is, I mean, it's done a good job of bringing down inflation, but what it's doing right now, it is killing the world. Like, literally, the Federal Reserve is killing other world currencies, and everyone's going into severe, severe recession, potential depressionary type of situation. So the Federal Reserve is going to have to pivot soon. And when they pivot, when the pivot happens and they announce it, like, people think it's going to happen right now. People think when it's announced, right, there's trillions of dollars sitting on the market. It's going to go whoom. It's going to go so freaking fast that you're going to say, holy moly, why didn't I buy at 19,000? And by the way, I'm not a financial advisor. This is not financial advice. Do not buy or sell anything because I'm talking about it. But I'm just telling you my personal opinion. So, like, people are going to be like, oh, no, I wanted to buy the bottom. I'm trying to buy it at 12,000. That is definitely freaking rad, right? If it goes to 12,000, you can buy at 12,000. And you know, that is still a possibility. I mean, if you look over here, like we check on the weekly charts, there we go. All right, so now you want to see some weekly liquidity. There's some weekly liquidity here at 9,000, 8,000. Let's look at monthly. Because this liquidity tracker only goes back 100 candles, right? So if we look here on the monthly charts, there's even liquidity down here at $366. I don't think it's going to get that liquidity, buddy. I don't. But look what you do have here. There's liquidity here at 3,900 even, and then 3,100. Those never got cleared before taking off. But you know what they did? So there was a bunch of liquidity all right here. This move came and cleared out all of that liquidity. This move right here came and cleared all of these liquidities. And then all of these got created. And on this move to the upside, it just cleared out all of those that were created back here. So looking at the weekly, there's a crazy batch of it down here. I don't think that it's coming to get that. But never say never. On the dailies, when we take a look at this though. So as we look here on the dailies and we check our supply and demand, price is right here right now. Okay, so price is right here right now. If we take our box and we highlight this last blue candle before the up move, that's a box, supply and demand box. Go below that one to here, highlight that one. That's a supply and demand box. The bottom of that one sitting at 16,888. Okay, and let's go even down a little more to this one here. 16,175, and the bottom of that is 15,796. And then I think this is the one everyone's dreaming about, 13,840. So that would have to be a crazy move though, right? I mean, let's go look. Let's go back to present day. So you can see we've already dipped into these levels before recently. The June lows got into these boxes. So let's go ahead and remove that box because it's been cleared. This box definitely can be hit again because it still has a liquidity in there. Below that, it's not very much farther, right? Because the bottom of that box is 16,800 to the top of the next box, 16,001. And then the real drop down to here is going to be rough, but 13,843. Could that happen? Well, here's an interesting thing we could go with. Let's take our trend line, go from this one here to this one here. So we've broken to the outside of that trend line. So that's actually bullish, right? So we broke to the outside of that. We're not just continuing to travel down that. So we have to break down below that trend line again. Let's do an inside trend line here. Let's do like this one, this one. Let's go ahead and clear that. Let's do from this one here to this one here. So if that were to come down, yeah, that trend line doesn't work either. Well, anyway, this trend line does work. So if you go from the tippity top to here, we can adjust this a little bit. But even if we adjust, I mean, we've broken outside of that trend line so many times. It's just not taking off yet, right? It's not mooning for us yet, which is interesting because it's like that trend is broken. It could always fall back into the trend there. But this is what's exciting about trading. So those are all my thoughts that I've just been, when I'm in the charts all day, every day, these are the things that I'm contemplating, what's going on, what's going to happen. And so that's why if you're looking for a crypto shortcut and you want to hear my thoughts, make sure you subscribe. And also